Welcome back to the channel, fellow Wall Street engineers. In this video, we will be going over whether or not investing in Palantir is the right decision for 2021. To start things off, I want to break down how I go about my due diligence for long-term holdings. First things first, we want to read the 10K annual report to truly get a better understanding for what the company provides. Next up, we want to examine who is running the show. Does the executive team have a solid background? Is the founder still involved with the company? Next up, we want to glance over the company's forward-looking statements to see if what they're looking forward to will truly add value to the stock moving forward, because remember, this analysis is geared towards holding this stock long-term. Right after that, we want to look over the complete opposite and see what the company's risk factors entail. We want to know what management is worried about, so if we slowly start to see them coming to fruition, we can get out before the storm brings down the value of the stock. Next up, we will see what's the balance sheet and income statement looking like, and finally go over the chart to dictate price points of interest. Make sure you watch this video all the way through so you don't miss out on any important content, as I'll also be discussing insider information coming from a software engineer, myself, who has been recruited by the company and has a better idea than most people online as to how the company manages to attract talented engineers. All right, let's get started. So what is Palantir? The company is based in Denver and offers three products: Palantir Gotham, Palantir Foundry, and Palantir Apollo. To get into more detail, the first platform is primarily used by government agencies as an anti-terrorism tool. This software provides majority of Palantir's revenue via government contracts. The next platform provides software services used by banks, financial service firms, and hedge funds. This service gathers their customers' data to solve their most urgent problems. The software allows their customers to integrate and analyze all their data so they can answer questions that they couldn't have before, therefore unlocking enterprise growth and insight that no other software in the market can provide. And last but not least, Apollo, which is used by corporate clients and works around the clock to put Palantir's latest features in the hands of their customers. It eliminates the trade-off between stability and speed by delivering continuous, automated updates without disrupting operations. It's why Palantir's platforms have been receiving so much traffic, powering mission-critical operations for the world's most important institutions. So, with that information alone, I'm liking the company's long-term outlook, as its software provides a service that is only going to gain more traffic as years go on. But we are nowhere near done with our due diligence. Next up, how's the executive team looking? Let's start with the chairman, who is also the co-founder of PayPal, Peter Thiel. This man alone makes me want a piece of whatever he's working on. He was one of the early investors of Facebook, LinkedIn, and Yelp. He's worked with Elon Musk and almost became a freaking chess master. Next up, we've got the CEO, Alex Karp, who is also the co-founder of the company. It is always a good sign when the founder or co-founder is still in the picture, because no one is going to want what's better for the company than the co-founder himself. The company is like his baby. I've heard him speak in different interviews and earning reports, and there is no questioning this man's knowledge and dedication towards the growth of the company. Beautiful. I love the software. I love main key parts of the executive team. Now, what's their forward-looking statements looking like? After going through their 10K annual report, here are some key points. Palantir is expecting revenue of over $4 billion or more by 2025, and a revenue growth of over 30% in 2021 in comparison to 2020. And Alex Karp, the CEO himself, has publicly stated that Palantir is arguably the most important software company in the world, which isn't too far-fetched after getting more insight on what the company provides. Now, vice versa, some risk factors to be aware of. Palantir truly relies on sustainable revenue growth. Any earnings miss or slowdown in this revenue growth can add selling pressure to the stock, therefore putting the company in a vulnerable position, as the company has yet to have a positive net income over the past 17 years, which can then lead to more selling of company shares, further diluting the stock, because this company has a huge annual operating expense of around $1.9 billion. I will get into more detail about that in a bit, but last risk factor to keep in mind. Majority of the company's revenue comes from government contracts, and the fact that the company has announced that they intend to not have any business operations in China may harm its revenue and profitability. Growth prospects may be limited, and the company may be kept behind its competitors who choose to have business operations in China, losing the edge over competition. I'm not too concerned about that because any company dealing with sensitive United States information should not be dealing with any other affairs, but always get to hear the positives and negatives. Moving on to the balance sheet and income statement. So the company currently has a market cap of about $49 billion and a total revenue of only $1.2 billion. So our PS ratio sits at around 40 times revenue, which is not good at all. Most big tech companies go around 10 times revenue, but you can also argue that we are in a new age of investing. A stock price is no longer geared towards classic financials anymore. If that were the case, Tesla would be selling for a fraction for what it's worth today. It's truly up to investors to decide what this company's future is worth. But right now, with the stock price being 40 times their current revenue, I do see higher risk than upside for the time being. The growth expectations for 2025 already seem to be priced in, but again, remember, we are in a new age of investing and the market can push the stock higher if the hype around the company's future continues to rise. Just to give you an example, Nvidia in 2016 was in the same situation, yet the price of Nvidia in 2016 versus 2021 is ridiculous. Next up, looking at the revenue growth year over year, Palantir is doing an amazing job from 2018 to 2019 to 2020. Palantir's revenue is constantly climbing, but the net income, meaning the take-home profit after all fees and taxes are paid off, doesn't look so hot, with 2018 bringing in a total loss of $580 million and 2020 bringing in about $1.1 billion loss. So great, the company is bringing in more money year over year, but the take-home profit seems to get worse and worse. Now, why is that? Well, the company is constantly reinvesting in itself. So yes, it's bad that the company seems to be pushing further away from profitability, but as the company progresses its technology and more institutions and government agencies become more familiar with what their tech can provide, more government contracts will be thrown their way and more institutions will want to use their products. And it's clear that this is slowly becoming the case, as in reference to the revenue of 2020 nearly doubling from what we saw in 2018. And it seems like every other week, Palantir is announcing a new government contract. Now, what worries me is if Palantir continues to sell off shares, as the basic average shares of the company has grown from 905 million in September of 2020 to 1.8 billion in March of 2021, meaning Palantir needs to sell more shares of the company to help fund the business, therefore lowering the value of the shares you currently hold. So we do have a major concern if the company continues to sell more shares moving forward. What we'd like to see is the company buying back more shares, which may happen in the future, but as of now, they've been selling off a lot of shares. With this in mind, how much cash is left on the table considering they've sold off so many shares? Looking at the balance sheet, we can see Palantir is sitting on over $2.3 billion in cash and cash equivalents, which is a huge amount of money. But to Palantir, that may last them about a year and a couple months, with their operating expense in 2020 alone running the company $1.9 billion. Does that sound scary? Yes. But if we take into account the expected revenue growth year over year of about 30%, 2021 should bring in around $1.3 billion in revenue. Add that to our current cash and cash equivalents, we are looking at $3.6 billion in cash and cash equivalents. Take away $1.9 billion in operating expenses, we are left with $1.7 billion in cash and cash equivalents for 2022. Now add a 30% revenue increase from 2021's $1.3 billion in revenue, we are now sitting at around $1.7 billion in revenue, bringing in our cash and cash equivalents back to $3.4 billion. So at first glance, yes, it's scary. Palantir's operating expense is around $1.9 billion a year, but the revenue that is coming in justifies that. And the fact that millions upon millions of dollars is getting reinvested into the company year over year, with categories like research and development for 2020 alone costing $504 million. Money is being spent to grow the company in years to come. Now, looking over the daily chart, our last form of resistance sits at 2620. If we can get a full candlestick above that mark, we can see the stock price rally. But if it doesn't, we will wait to see how low price falls between that 2620 and 1706 range. So if we get a full candlestick above that 2620 mark, I would feel comfortable buying shares as soon as tomorrow and holding for the next 3 years. Otherwise, I will wait to see it consolidate around that range mentioned and buy then. So is this stock a buy and hold for the next 3 years? 100% yes. Biggest concern here was the PS ratio and share dilution, but I believe the share dilution was in play due to COVID slowing down business, and the PS ratio being so high is normal with growth stocks surrounding so much hype. Just be sure to keep an eye out on revenue growth every quarter moving forward. This company needs money to make money, and if revenue begins to decline, I may reconsider my investment. Now, as I promised from earlier, I have been recruited by Palantir via LinkedIn. I am a software engineer working for a Fortune 100 company, and a Palantir recruiter reached out to me not too long ago. Me personally, I love where I work and wouldn't consider the transfer to Palantir due to the move away from family and friends, but I did ask questions in regard to potential pay and interview process. The pay was very competitive, and the interview process was just as intense as Google and Microsoft's interview process, as I've been through them all for a software engineering position. So it truly goes to show Palantir is doing a great job at gathering the top engineers for the job. Alright, that is it for this video. Thank you all so much for watching. Be sure to leave a like to push the positivity towards this stock to other retail investors, and be sure to subscribe so you don't miss out on any future content. Until next time, I will catch you all in the next one.